Hello there and welcome to Equity Story. My name is David Malinowski and today my guest is Marcin Hejka, the co-founder and general partner of OTB Ventures. Lovely for you to take your time and to come here.
My pleasure.
Thank you. So today we're going to talk about essentially how one switches from an illustrious career at a household name in technology and builds something of his own and something rather quite impressive. So I suppose without further ado, so before founding OTB Ventures, you have spent almost 2 decades at Intel Capital, where you, as we've mentioned, you've had a rather illustrious career. So you have managed entire regions for the firm, and including our region, so CE, Central and Eastern Europe. And you also took part in various interesting projects, like for example Yandex or AVG antivirus. So in relation to matters like this, can you tell us about your time in general and your career before OTB?
Of course. I spent 18 years at Intel Capital. It was a very interesting time. Joined Intel Capital in '99. It was shortly after Intel Capital decided to expand to Europe. Previously, for a number of years, Intel Capital was only investing in North America. And in '98, the organization decided to expand internationally, established UK office, and decided to expand to the continent. I joined in '99 to open up and head Intel Capital operations in Central Eastern Europe. So it was, I had to spend some time in the UK, but the office was located in Warsaw, and I was supposed to look for opportunities and execute deals in Central Eastern Europe. Mm-hmm. And it was interesting time. It's hard. It was let's say the pioneering age of technology investing in Europe. Mm-hmm. It's hard to believe today, but at that time, internet penetration in Poland was somewhere between 1% and 2%. And using internet was very unique. It was very far from being obvious. And it was really the beginning of everything, the beginning of the first internet brands. It was the beginning of e-commerce, or even ahead of it. And it was actually super interesting times and super interesting job. Mm-hmm. So Intel Corporation, which was at that time, and I believe still is, the largest supplier of chips, decided to support the growth of internet. The strategic intent was as follows. So Intel was the largest producer of computer client chips and server chips, with over 90% market segment share. Mm-hmm. So basically at that time for Intel Corporation, there was no other way than to grow with the market. Mm-hmm. Because basically, the growth through increasing market share was not really an option for a company that already had pretty significant. No, I would never use word monopoly, and Intel never used word monopoly. Mm-hmm. But it was, let's say, very, very material market segment, sure in its market segment. Mm-hmm. So Intel was really in a position where its growth was really a function of the growth of the entire ecosystem. At the same time, Intel was probably one of the very few companies that had enough resources and enough expertise and knowledge to be able to accelerate the growth of entire ecosystem. And Intel Capital was really a tool Intel was using to accelerate development of new technologies, of internet, of technology consumption. And the assumption was that if Intel Capital is able to invest into something that one way or another will increase technology adoption in either consumer or enterprise business, Intel Corporation will have a double win. It will win because it will make money as investor on return from investment. But if any of those new technologies will generate in the accelerated growth of the entire ecosystem, Intel Corporation almost automatically will have significant part of this growth and will benefit through increased demand for processing power. So basically my mandate was, I got a checkbook and my mandate was basically to invest into anything that one way or another could increase demand for processing power, meaning, I was investing in new technologies, new services, new products that were appealing to either consumers or enterprises. It was super exciting. I did not have many limitations or any limitations. Basically at that time, let's say the Silicon Valley culture was different than today, and Intel was at the time I joined, Intel was still managed by its founder, by Andy Grove. So it was a culture of risk taking. I could really do almost anything. So I could invest if I wanted to do something. There was typically a way for me to do it. And at that time, I was investing in some, let's say, internet portals, e-commerce companies, and search companies. But the logic was always to make something, to invest into something that will make the use of internet more appealing to consumers, or the use of technology more appealing to consumers or enterprises, that could create, number one, opportunity for Intel Capital to make financial return on investment. So financial viability was obviously required. And obviously the strategic result would be accelerating the growth of the market. Super exciting times. And as you mentioned, at that time started from investing in companies like Wirtualna Polska, which was the largest, at that time, it was the largest internet portal. It was the largest horizontal internet portal in Poland, which meant that the company had 5 employees. At the
Unbelievable if you think about
yes,
it.
In 99, when Intel started discussions with Wirtualna Polska, the company had 5 employees, with servers located in the house of one of the founders, and it truly pioneering times. In terms of search engines, actually, I did invest in 2 search engines. And actually, both were very solid technologies. Both were winning in blind tests. They were winning against Google.
Interesting.
And one of those was Yandex, as you mentioned. The other one, which was pretty amazing story. So also invested in the company when it was super early. The company at that time had around 20 employees. So it was, you can say, much larger than Wirtualna Polska when we started talking to them. And another one would be Centrum CZ, which was a Czech company, which at the time of investment was also managed out of rented apartment and had around 6 employees. And it worked really well. So Yandex eventually got public. It listed on Nasdaq at an IPO valuation was around $7 billion. So it was quite
a jump,
quite a journey, and very solid financial return. Centrum was acquired by Warburg Pincus. Regarding AVG, the story was very similar. So once again, it's very hard. It was, of course, much later investment. So in AVG, it was already, let's say, the mid 2000s, and the company was at that time one of the best, let's say, security software for SMEs and SOHO, small office, home office, and consumers. And actually, it was a free product for consumers.
Okay.
And once again, it's hard to imagine, but at that time, only around 50% of consumers were using any antivirus software.
Whereas now you pretty much have to.
It's universal now. Now everyone is aware of the risks of related to hackers and viruses and malware and spyware and etc. At that time, it was not obvious, and Intel identified this as basically a bottleneck limiting growth of, let's say, internet usage and adoption of new technologies. Basically, SMEs and, of course, enterprises understood that first. So enterprises understood the risks and were generally protected. But at that time, it was not an obvious thing, and it was limiting adoption of new technologies and usage of internet by enterprises and SMEs and consumers, because it was a limiting factor that SMEs and consumers were assuming that using internet and basically moving its products, services to the internet is risky because of malware and viruses. So adoption of security software solutions could actually accelerate the development of technology market. And AVG was excellent technology. It was, at the time, Intel started investing in more sophisticated enterprise products and technologies in the region, and the region proved to be excellent source of quality technologies and enterprise software that could be applied globally. Which is basically a function of incredible engineering and software talent that we have in our part of the world.
Indeed.
And AVG at that time had a couple of unique elements. Number one, it was a free product for consumers. So any application by business required a license. But consumers could use the product for free, fully functional. So actually, in a way, AVG invented the freemium model, meaning that before AVG, the only way not to pay for any software license was to use a trial version for a couple of months.
Yeah, 30 days, and you had to reinstall it. Something like that, yeah.
30 days, 3 months, whatever, but it was short. And AVG was really the first company that offered fully functional, full product without any technical limitations for free to consumers. Number one, it was amazing because without any PR, without any marketing budget, the company was growing exceptionally fast in the enterprise market, because basically people who are using the free version as consumers understood how good the product was and were recommending or using that in their small businesses. At the same time, the company was actually getting quite a lot of revenue from consumers who were paying for the product, even though they did not really have to. Because they understood the value and they decided to buy the license even though they could still use the free product. It was pretty interesting. And AVG really invented the freemium model and invented the way how to make money, really solid money on free users. Mm-hmm. Another element that was which was really eye-opening for Intel, for let's say Intel headquarters. It was not a surprise for me, but Intel HQ suddenly realized that Central Eastern Europe can produce excellent technologies. So AVG was really excellent antivirus technology, which had a couple of advantages. Number one, it was incredibly light on resources. So it was
computer,
exactly. So at that time, still we had to deal. At that time, we were dealing with limited resources. So basically, the assumption was that using of most antivirus or security software products would make your computer slow. Mm-hmm. Would consume significant percentage of your PC resources, meaning memory and CPU.
RAM, yeah, of course, yeah.
AVG had an advantage of being very light.
Mm-hmm.
So basically, it was using very limited resources, and people were getting very high level of protection, or one of the industry leading levels of protection. At the same time, not really compromising its resources. Mm-hmm. So it was very popular product, and another element was that it was actually at that time AVG was one of the leading, or probably the leading provider of security to email servers. Mm-hmm. Because at that time, absolute majority of email servers globally were based on Linux, mm-hmm. and free AVG software was used as basically almost the default security solution for email servers. Mm-hmm. So incredible investment. Invested in the company, and the company kept growing super fast. The journey ended with an IPO, mm-hmm. On the New York Stock Exchange in 2012. Sorry, let's say early 2010s. Mm-hmm. And it was once again another super good journey. The company had IPO valuation of almost $1 billion, and another fantastic return for Intel Corporation, both strategically and financially. So I would say that the company, this one and Yandex, Centrum, and several more, had an impact on my job. So basically, I started as regional director of Intel Capital for Central Eastern Europe. And actually incredible performance of the region. So Central Eastern Europe, to everyone's surprise, became the best performing geography for Intel Capital globally. Mm-hmm. Performing better than Silicon Valley, better than China, better than any other region in the world. And I should probably say that it was beginning of my role increasing within the organization. So initially I was asked to manage Middle East and Africa on top of Central Eastern Europe. Mm-hmm. Then I was asked to manage Asia Pacific, except China, mm-hmm. which mostly meant India. It was the area where Intel Capital was very active and where team and portfolio were very strong. Eventually, I was also asked to manage Western Europe and Israel. So on top of let's say most global emerging markets, I started managing also some of the most mature
markets, economies. Yes.
One of the most mature and developed venture capital and technology markets, meaning Western Europe and Israel. So eventually, my final role at Intel Capital, I was basically being member of the Global Investment Committee, vice president and managing director responsible for global operations, except North America and except China.
No, that's pretty impressive, if you don't mind me saying. And that, when you talked us through all of this, there's only one, I suppose, natural question that one wants to ask. So you've done all these things. You climbed this proverbial corporate ladder in a very impressive, time and impressive manner. During the actual time in the broader sort of context of, the growing, economies and the evolving market, that was, also very interesting. Must have been very interesting, as you mentioned, for you as a professional. So, when was this time when you decided to, or was it something that you actually planned, that you want to go your own way, build something of your own that belongs to you?
It was a process.
Mm-hmm.
So there was not a single moment.
Mm-hmm.
I was maturing to this decision.
Mm-hmm.
So number one, Intel was a great place to work. It was a great place to be in. It was the largest corporate VC. I'm absolutely sure the best corporate VC, and probably once a month we had a visit from another corporate trying to learn from Intel about venture investing, and I would probably, it would be fair to say that the absolute majority of corporate VCs are sort of clones of Intel Capital, or their structure and their model of operations is based on the model of Intel Capital.
Mm-hmm.
I was doing some of the most exciting investments. So over 18 years, I was in the organization. I invested in 36 companies myself. So always wanted to invest myself, to have direct relationship with founders, with some of the greatest minds.
Mm-hmm.
I completely hated the idea of being just a bureaucrat managing the team. So it was absolutely fantastic, and it was not an easy to make a decision to leave. So I was really maturing, and it took me a while to be ready. And what were the reasons? I would say number one, Intel Corporation was changing.
Mm-hmm.
So I would say that the corporate model overall, and specifically Intel Corporation model, was changing over time. Number one, I would say that corporations were becoming more and more corporate, or let's say the processes were getting more and more strict.
Structured, yeah.
Let's say flexibility and ability to do certain things was limiting.
Mm-hmm.
And what started as basically having a checkbook and ability to invest into anything was over time more and more limited and subordinated to the overall strategy. So basically, instead of basically doing great things that could change the world, and advance technological,
became more bureaucratic.
It was, let's say, technology ecosystem.
Mm-hmm.
It was turning into something that was more and more subordinated to Intel Corporation's business strategy.
Mm-hmm.
So in more and more cases, it was necessary to get, let's say, blessing of one of corporate business units.
Mm-hmm.
So let's say the element of, let's say, it was becoming more and more structured, more and more process-oriented,
mm-hmm.
therefore less exciting,
mm-hmm.
and it was leading to to the situation where basically I could no longer do the kind of deals I wanted to do because I thought they were amazing and exciting. And more often than not, I had to do things that were in line with let's say, strategy of corporate business units. So let's say the component of fun was over time decreasing.
Diminished, yeah.
Exactly. Another element was that, and let me be super fair about it. I think for any corporation, it's super difficult to offer its let's say its investors, its venture investors, the kind of upside you could see in the market. And so technically corporates are paying salaries.
Of course.
And it was I had super good life at Intel. I definitely cannot complain, but I was making tens and hundreds of millions of dollars for Intel Corporation and having no share of that, other than good salary
and satisfactions, I suppose. Yeah.
And huge satisfaction and a pleasure of doing great things and a pleasure of working with fantastic founders. And finally, I would say that running a venture fund is a 10 to 15 year commitment. You don't start a fund when you're 60.
No.
And I was already in my, let's say, mid-40s and was thinking, okay, it's really now or never. So to be very honest, it was not an easy decision. I think Intel Capital team was pretty amazing. I still spend a lot of time working with people I met and worked with in Intel. But it was really the time to do it. And I must admit it was not an easy decision, but it was probably the best decision I could do. So back in 2017, together with my co-founder and with my co-founders, we started working on establishing OTB.
We'll get to that in a second. I was just going to ask you, sorry to obviously interject, but I was going to ask you about the whole process through which you founded OTB. So when you actually reached that decision, as you said, and you moved to that stage, that actually because of those reasons, now is the time, and I need to change something. I want to take the steering wheel of my destiny, in this sense, if you can put it that way. So, how did you go about launching OTB with your partners, with your colleagues? And, I suppose more importantly, even what were the sort of key variables that you took into account? So, perhaps, how did you go about forming the fund's philosophy, the broader strategy, and, how did you come about to choose the location of your focus, focusing on CEE?
So starting with co-founders. So I must say you need to be lucky in your life, and I was incredibly lucky to meet my co-founders, Gregory and Adam. Adam Niwiński, one of my co-founders, he really reached very similar moment in his life. So he was an entrepreneur. He established a couple of companies himself. Some of companies that can be described as some of the first fintechs in the region. He established a bank. He co-founded a consumer bank in Ukraine, one of the leading ones. Through one of his companies, he ended up in a bank, and where he eventually spent 15 years. It was Bank PKO SA, one of the largest banks in the region, and part of the UniCredit Group, where he became deputy CEO and CEO successor. At the same time, we were working together because he was an active angel investor in technology companies. Very, very good one, very successful one. And eventually, he reached similar stage in his professional life. So basically, he reached the level of CEO successor in one of in the leading bank in the region, but he was really in his heart an entrepreneur and an investor. And also banking sector was probably evolving in a bit similar way to technology corporate world. So it was probably getting less innovative, less exciting place. We decided to team up, and we are both general partners in OTB and already working together for 6 years almost, and it's been absolutely fantastic time and fantastic journey for both of us. Gregory Jankilewicz, who is the third co-founder of OTB, who's not operationally involved. He is a super successful entrepreneur, co-founder of Mercuria, and he is he's a co-founder. We are working together, but he's not operationally involved in the company. But I believe, in terms of the founding team, I could not have been more lucky. In terms of strategy, we decided we established strategy that I must admit has been working incredibly well. And once again, it was not necessarily obvious at the time we established that back in 2017. So in 2017, we decided, number one, to focus on DeepTech sector. So basically to invest in some of the greatest engineering and software minds in Central Eastern Europe. But DeepTech focus meant that we were investing in technologies that could be, in DeepTech technologies that could be applied internationally. The assumption is, and it proved to be absolutely, it proved to be absolutely valid, that Central Eastern Europe is a great location in terms of technology talent. It is, I would argue, one of the two locations on the planet in terms of the quality and size of the engineering and software pool. So I would say that the only other place which has comparably high quality and comparably large pool of engineering talent is Silicon Valley. And there's no other region globally that could be compared. Israel is absolutely amazing in terms of quality of engineering talent, but it's not that big. Israel is a country of, let's say, 10 million people. Central Eastern Europe has a population of 140 million. And the engineering talent pool is just bigger. and the region, the talented engineers from the region have a track record of building world-class innovations, world-class technologies. At the same time, the region is periphery of periphery in terms of technology consumption. So this is very unique part of the world where basically you can build some of the greatest technologies. At the same time, there's no really a way to scale any business. And the strategy we established back in 2017 is you can even describe it as an arbitrage model, investing in some of the greatest technological teams in the region and helping them to scale internationally. In North America, in Western Europe, in Asia, where technology consumption is much bigger, where you can really scale the business. And we selected 4 sectors, and this focus proved to be really a good one. And those sectors are space technologies, enterprise AI and automation, FinTech infrastructure, and cybersecurity. Number 1, why 4 sectors instead of 1? It is the sort of the right balance between still being focused and at the same time, betting on a single sector could be too risky, because number 1, single sector is generally more prone to either macroeconomic or sector-specific developments and trends. So I would say that from perspective of having more balanced, safer portfolio, having a bit broader focus was absolutely logical.
Diversifying, spreading your eggs.
Absolutely. Each at the same time, I would argue that we're still a bit worried that the region we were focusing on could be too shallow to produce, let's say, the sufficient volume of opportunities if we're more, let's say, sector limited. At the same time, all those 4 sectors had a proven history of having sufficient deal flow and sufficient number of success stories in the region. And this strategy worked really well for us. So we proved to be able to generate really solid deal flow. I can tell you that in the first year of operations, we got roughly, let's say, 400 opportunities. After 5 years, we got to almost 1,000. So number 1, it proves that deal flow is here. The opportunities actually do exist. Number 2, it also proves that OTB was able to establish itself as a brand. Because I guess, if you're not recognized in the region, generating around 1,000 opportunities per annum would not be easy or even possible. Another element that is important is that the theses were proven not only by deal flow, but also by deals we're able to make. And we really invested in some of the most exciting companies with tremendous international success. So in terms of SpaceTech, ICEYE is without doubt the most successful European SpaceTech. And actually, it's the second largest SpaceTech globally in terms of funds raised, just behind SpaceX. So the company is absolutely amazing. So Rafał Modrzewski, Pekara Laurila, the 2 co-founders, actually made something absolutely incredible, becoming the leader of the satellite SAR market globally, with SAR sector actually being one of the biggest disruptors in satellite imaging market globally. So amazing story. But there's way more than that. Silent8 is the leading global company providing AI-based software automating AML processes, which is one of the biggest problem that is now and one of the most important problems that financial institutions, and not only financial institutions, have to tackle these days. It's also demonstrated by the exits we were able to produce in our portfolio, even during the investment period. So before
secondaries or
no, I mean we had two strategic sales. Two of our portfolio companies were acquired, one by Microsoft, another by Cisco Systems, even before we ended the investment period. So those were, let's say, very fast exits, which is probably
was it Mint by Microsoft?
Sorry?
Mint? Was it acquired by Microsoft? Yes.
It was Minet, which is...
Sorry, Minet, yeah.
Minet, the leading technology, the software that was able to automatically map and monitor enterprise processes. Incredibly, it is very difficult technology. So basically you need to capture and analyze literally billions of data points coming from various enterprise applications to be, and based on that you're building incredibly accurate, incredibly precise map of enterprise processes, which is absolutely necessary. For any enterprise, in order to optimize and improve its processes, eliminate bottlenecks in processes, you need to understand how they look exactly and where those bottlenecks are. And in 21st century, it's not really possible without technology. This software is very difficult to build. And mine it, and by the way, absolutely great job by the by Minet team, by Rasto and Jaro, the founders of the company, and Christian, who was the executive chairman of the company. They built a technology that proved to be one of the leading technologies in this sector globally. The company got attention of some of the leading enterprise software companies and got an acquisition offer by Microsoft. And it's pretty amazing. Actually, Bratislava, where Minet was based, is now becoming the let's say automation and enterprise automation competence center for Microsoft. And Microsoft is planning to grow the office and the team and the presence that really started with acquisition of Minet. The other acquisition of our portfolio company, it was Bubble Labs. Another amazing story. So Poland actually has become one of the most important competence centers for speech and audio technologies, where actually Intel established its speech and audio competence center in Poland. Amazon Alexa development center is also located in Poland, in Gdańsk, and it was established based on acquisition of Ivona Software.
Yeah, I remember Ivona when it started. Yeah.
And Samsung, one of the largest Samsung R&D center outside of Korea, is also located here. So there is a lot of speech and voice competence center, and Bubble Labs was capitalizing on it. So our portfolio company, it was established by the, let's say, the co-founders from US and Poland. The founder of the company, Chris Rowan, was super experienced founder and an entrepreneur from Silicon Valley. Kamil Wójcicki, who was the chief scientist in the company, was or is Polish. So we invested in the company that built the leading noise reduction and speech enhancement technology. So Bubble Labs technology was capable of separating any element of audio stream from the rest. You can say that it could separate human voice from the audio stream in a way that it was the only technology that was working well, even if noise level was higher than speech level. So technically, the technology was doing magic. So it was you could separate human voice from the audio stream where you could hardly understand what was being said, and make it sound almost like a studio recording.
That's pretty incredible.
And you could do it. What's even more incredible, you could do it in real time. Because actually, you can do a lot with audio when you do post processing.
Yeah, of course. But in real time, that's pretty impressive.
Doing this in real time is completely different level of technical challenge. And Bubble Labs was able to build the leading technology doing this with numerous super interesting applications. The natural application of the technology that comes to mind is obviously communications.
TV,
Let's say, voice communications like phone conversations or communication platforms like Zoom or Teams, etc.
Yeah.
But actually, the applications were way richer than just communications. So this technology could be applied to AI assistants. So every AI assistant like Siri, Cortana, Alexa, or anything else starts from speech to text.
Yeah.
And speech-to-text engines are generally very sensitive to noise. Actually, human brain is very flexible. It can compensate for a lot of noise. But let's say speech-to-text engines doing automatic speech-to-text are actually quite sensitive. And applying noise reduction
is a game changer, effectively.
Actually was reducing the error rate of AI assistants by a factor of several X. So it was one super interesting application. Another super interesting potential application was speech-enabling devices, including industrial devices or vehicles. In certain situations, it's actually super important to be able to use voice commands to operate industrial equipment. So in case of emergency, in case of a heart attack of an operator, it's incredibly important that you can call for help, call emergency, turn off the production line, stop the train, for example, using your voice. And in all those cases, you need to deal with a lot of background noise. So imagine, let's say, a factory during an earthquake, or factory in Japan during tsunami. You have a lot of noise. And you need noise reduction technology to really make, to speech-enable devices. And it was another application that the company was exploring. And incredibly quickly, so super exciting technology, very, very strong engineering team, super strong founder. And the company was approached by once again, more than one potential strategic buyer. and in a little bit more than a year after investment, we got an acquisition offer from Cisco Systems that was accepted. So that was another exit that we had in our portfolio, actually still during the investment period.
Mm-hmm. If we can then take this sort of perspective a bit forward. So obviously it's not a secret that you have just wrapped up fund number 2, and now you are focusing your time on that, I suppose. If you can tell us a bit more in terms of what you'll be looking for. I suppose you'll be focused on companies, again, operating in Europe, in your key sectors of focus. But if you can tell us a bit more about that.
OTB Fund 2, we had the first closing of OTB Fund 2 in November last year. We are super proud because we know that the end of 2022 was not an easy time from perspective of let's say macroeconomic situation, and we were able to do the first closing at the level of 140 million euro, which is almost a target. Our target size is 150 million euro. So we are super proud. And the strategy is actually going to be almost unchanged versus Fund 1. So we are super happy with the sectors we have selected for Fund 1, and we are going to continue invest in the same sectors, meaning space technologies, enterprise AI and automation, FinTech infrastructure, and cybersecurity. We are going to just make 2 adjustments to the strategy that was established during Fund 1. Number 1, we discovered that especially in SpaceTech and enterprise AI and automation strategy sectors, we established a brand that is going beyond CE. So in terms of SpaceTech, we have become one of the top 2 or top 3 funds in Europe, and deal flow we are getting is let's say is European wide. We see it's pretty much almost all opportunities in Europe. So we get proprietary deal flow, and we have enough expertise to be able and deal flow to source deals Europe-wide, to execute, to evaluate and execute them in a location in Europe. The same applies to our enterprise AI and automation strategy. So we decided that in Fund 2 we will not be limited to Central Eastern Europe. Central Eastern Europe is probably going to still constitute 80 to 90% of our deal flow going forward, but we will be able to execute deals without strong links to Central Eastern Europe. And the second change to our strategy is that we are going to be able to invest earlier. So we decided to establish, let's say, a seed pocket in Fund 2 of up to 10% of Fund 2, where we will be able to invest in companies at much earlier stage of development. Let's say post-product, but very, very early in terms of revenue, maybe even pre-revenue stage, let's say POC stage. And the reason is as follows. So in Fund 1, we discovered that in Fund 1 was really post-product, post-revenue. We required certain material traction to be in place before our investment. And in Fund 1, we had a number of cases, let's say almost around 10 cases, where we really liked almost everything about the opportunity. The founder was absolutely amazing. We liked the technology, we liked the market, and we still passed. We still didn't execute those deals because they were too early.
I see. Okay.
And in some cases, we were able, we executed those deals later. So we invested later. Not much changed. The company was a bit more mature, but not much else changed. Valuation was obviously higher. In some cases, we were not even able to invest in those companies because they developed so fast that we couldn't catch them on the way.
You missed the window, basically.
And we missed those opportunities. So we decided that
a bit more flexibility won't hurt.
that in Fund 2, it would be really great to have let's say, a pocket. It's not going to change the main strategy, the core strategy of the fund, but we will have, let's say, up to 10% of Fund 2 is going to be available for, let's say, late seed stage opportunities, still within the sectors that form the core strategy of OTB.
I see. And in terms of what you said about the space sector specifically, do you think you could perhaps tell our viewers a bit more about that? Because that's, by the sound of it, it just sounds really exciting. So if you don't mind.
No, it is, absolutely. So ISI is, we executed, so in Fund 1, we did 15 investments. So our strategy is to have a bit concentrated portfolio. We do not follow the spray and pray approach.
Okay.
We want to have a concentrated portfolio. So in Fund 1, it meant 15 companies. We are very careful about the selection, but once we invest, we want to be, let's say, a meaningful investor. Always taking some board representation, in most cases board seats, and in some cases where we have a bit smaller investment, but still meaningful, we take board observer positions, but we do not want to be a background noise investor. We want to be a relevant value-add investor. Yeah. So, and out of 15 companies, we invested in 3 SpaceTechs. Actually, in terms of percentage of let's say, of dollars invested, it's way higher because generally SpaceTech investments tend to be larger. And we have 3 investments in Fund 1. ISI, which is the global leader of synthetic aperture radar satellite market globally, with already over 20 satellites launched. And the company being the pioneer of the microsatellite SAR market and technological and market leader overall. The other company is Hydrosat, which is another Earth observation satellite technology. The company is building its own super accurate, super sensitive infrared sensors. And satellite infrared Earth observation enables a number of really amazing things. So they can measure the temperature of the surface with incredible precision, which number one is the best proxy. So of course, in terms of, let's say, climate-related observations and predictions and analysis related to the risk of fires, it's there's no other way, right? If you want to basically monitor very large areas, there's no other way than satellites, because if you want to monitor temperatures on, let's say, global scale, no plane or drone can give you this opportunity. You need a satellite. Another element is that if you're so basically thermal resistancy, the ability to observe how fast the temperature of the surface changes versus the temperature of the air, gives you incredibly accurate information about humidity of the soil, which is absolutely critical information regarding
agricultural purposes.
Exactly. So it gives you ability to do crop predictions. It gives you ability to provide very detailed recommendations, analytics and recommendations regarding watering. Watering artificial watering is crucial in agriculture. And the problem we have is that very often humans are over-watering.
I see, okay.
Meaning that sometimes, which leads to actually lower crops. And what Hydrosat is doing is giving the opportunity to let's say, to provide insights and the recommendations, like, for example, if you reduce watering by 25%, you're actually going to increase crops by 30%. At the same time, reducing water consumption, energy consumption, without use of any chemicals, which is incredibly powerful. So this is Hydrosat. And we have another company is SpaceTech, which is the leading technology doing satellite image analytics in various areas, including, for example, monitoring of let's say sea traffic, monitoring ships in the sea. And doing various economic analytics and predictions. So the company, for example, is capable of predicting analyzing and monitoring industrial manufacturing output on a country level, or even GDP performance on a country level. So SpaceTech is a really very important part of our portfolio. And one of the two first investments we completed from Fund 2 is also a SpaceTech, also incredible technological leader in one of the super important segments of the market. Unfortunately, it's not announced yet, so I cannot really name it.
Well, I'm sure it's going to be exciting. So we all look forward to this. But I suppose, last question, coming back down to earth, to our, strictly Polish neighborhood here. So if you were to sum up your general thoughts in a few sentences about how do you see the near-term future for the Polish venture capital scene, and what are the different challenges, but also opportunities that you see that are sort of on your plate, if you like. And if there's one thing that you could change, perhaps in our general business environment, what would it be? Just out of interest, coming from a seasoned and well-experienced businessman like you.
So I would say that generally development of technology ecosystem and venture ecosystem in any country, there is certain evolutionary model that applies everywhere. And generally, markets that have intellectual potential or the base of engineering talent and software talent capable of building world-class technologies generally are well positioned to become incredibly successful ecosystems, but the existing of the talent, is not sufficient. You need sufficient volume of success stories. And this is the evolutionary model we observe across the region. So the market is sort of silent until it has one or a couple of success stories happening in the market. And in Estonia, for example, the ignition moment of the ecosystem was Skype.
Yeah.
So basically, every success story, like Skype, or Bolt, or UiPath, or so on, produces a number of people, let's say a few dozens people, who number one, made money on the exit. Number two, they know how to do it because they went through the entire journey and they understand what it takes to build a successful company and produce an exit and scale it internationally. and they replicate the model. So in their ecosystem, they establish new companies, or they become investors supporting other companies. And it's the beginning, it ignites the chain reaction. So, and you see certain recycling starting.
Of the success.
Of the
initial
success.
Yes.
No market really starts without no ecosystem becomes successful without at least one or a couple of success
You need that
stories.
initial impulse, effectively.
Exactly. So I would say that, in Estonia was the first one to become really recognizable and successful ecosystem in the region. But it's followed by other countries. So in Czech Republic, companies like AVG or Avast were really ignited the ecosystem. We have the same happening in Romania with the success of UiPath. So I would say that in Poland we're still lacking sufficient volume of success stories. And once it happens, I think the ecosystem will become super successful, because the country is really very rich in talent. So there's absolutely no reason
why it shouldn't be successful.
Why
right?
it shouldn't be as successful as any other country I mentioned.
Oh, excellent. I suppose that's all we've got time for. But indeed, thank you so much for coming in today. Ladies and gentlemen, all I can say on my end is that it is really inspiring to hear that one can actually gather fantastic experiences, fantastic training, meet people working in different geographies across the globe, and then take all of that and build something of his own and make it a success. So thank you so much, Marcin Hejka, co-founder of general partner of OTB Ventures.
Thank you very much.
And David Malinowski, thank you so much, and see you next week.